Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Greetings, Algo artisans. Welcome to the weekly market forecast and update. We're going to take a look at some charts. We're going to take a look at some possible trades based on what I think those charts are going to do this week. We're going to start off by taking a look at the NASDAQ, then we're going to do USDJPY, then Bitcoin, then EURUSD, GBPJPY, gold, and silver. Before we do that, take a look in the description. We have a freebie for you. If you want to learn how to build an agentic trading bot, an AI trading bot that trades for you, the first thing you have to do is create an algorithm. I have a video in there. You click on the link. It shows you how I build a very basic algorithm. It shows you how I turn it into code. And that's the heart and soul of an agentic AI trading bot. We also show you some of the tools that traders use to connect their bot to their exchange so it can trade for them when they're not sitting at the computer. So they might be golfing, sleeping, you name it. That's what that's there for. That's what we show you to begin with. And it's free, so click on it. Also, 60% of the people who watch this do not subscribe. Okay, so like, subscribe, help us out if you think that what we're doing gives any value. So we're going to jump into the charts, but first we're going to take a look at the economic data that comes out this week over at forexfactory.com because that can affect the charts and we got to work around that. So here we go. So Monday at 12:30 a.m., actually very early Tuesday morning EST, we have the Aussie cash rate and the monetary policy statement coming from Australia. So if you're trading the Aussie dollar or any Aussie markets, that can really affect those. Tuesday 10 a.m., we have USD data coming out, jobs openings and PMI. So that can affect anything dollar-based, including the stock market. We also have at 6:45 p.m. the New Zealand employment and unemployment data coming out, which of course can affect the Kiwi if you are trading anything in those markets. Wednesday and Thursday are very quiet this week. Friday at 5:20 a.m., Bank of England Governor Bailey speaks, so that can affect the British pound or anything pound related, including their markets. And 8:30 a.m. EST, we have Canadian and US unemployment data. So both of those markets will be affected possibly by that data. So let's go ahead and take a look at the NASDAQ right now. So you can see I have a trade here planned for the NASDAQ. There are a couple of possibilities, but I think the trade I've got mapped out here is the best. NASDAQ made an all-time high last week, and that's this blue line right here. Now price might break that. And so we might be looking at a long this week, but there's a decent chance that before it does that, it's going to touch this lower level right around 27,628. And as a matter of fact, the algos have it doing it for me in the next 24 hours, maybe even sooner. If price goes down to roughly that level, what I might consider doing is grabbing along once it flips roughly around this 27,630, 650 area. And I would be out before this prior all-time high from last week, which again is 27,969. I might take a long right there. This is a 2.4 to 1 just based on the way this is. It could be way better, but even with a generous stop loss, you're looking at pulling out at least twice as much money as you put in if you were to win and stay in, right? Now, this is just an idea. We don't give trading signals here. I'm just telling you what I'm thinking about doing, and this all can only happen if my algorithms line up. Now, price could eventually make it above that all-time high, but it might also bounce back and forth, giving us multiple opportunities at that long this week. So that's how I'm looking at it this week. Let's move on to USDJPY. Now, I don't think I'm going to touch the Japanese pairs until the market digests this big move that happened last week. The Bank of Japan on Thursday said that they would possibly protect their currency, which caused the Japanese yen to get very strong. And that really put a kink in the markets a little bit. And those kind of moves take a while to digest. Now, if I had to take a trade, I look for the dollar to book above the 157,556 yen level. I'd look for a small pullback, maybe right about here, and I'd take a long. I'd have a stop loss wherever that is warranted at that time. I just kind of estimate the one will be right there. And I would be out before this level right here, this blue line, because of this price structure right here. And that level I would be out before is 158,936 yen to the dollar. So I probably would come out maybe 158.85 or something lower than that. Now that in and of itself is a 2-to-1 trade. Again, pulling out twice as much money as one risked, right? Let's take a look at Bitcoin. Another dangerous pair to trade is very, very choppy. I'd look for a pullback on this. I do think Bitcoin's going to head up to 83,000. I think that's a legitimate trade, but if you look at the price right now, it's very choppy and there are algorithmic reasons why this might do a strong pullback before it goes up. So to have enough meat on the bone for this trade to have at least a 2 or 3 to 1 risk to reward ratio, I would look for a pullback first and I would enter after it flips up, perhaps around here. Or if it does it later, same exact story is how I would handle that. Maybe if it pulls back here, I'd enter, and I would use that structure for a stop loss to give me a nice trade. where price would go up to 82,880, roughly around there. Now, I would want price to stay above this blue line right here, which is 78,000 basically. If it stays above that, then I could go ahead and take that trade as long as my rules say that I can based on everything else. Let's go ahead and take a look at EURUSD. Now, this is the fun one. It is bearish, but I think we're going to see a short-term bounce. There's a couple of possibilities here, so I'm going to delete these and redraw them just so I clean up this mess a little bit. First possibility is that price bounces right about here, comes up to this maybe 117.15 level, and then pops down right there for a nice short. That's a possibility. What's also a possibility is that price actually heads below before all that, comes back to grab this structure, which is about 116.89, and then heads down. Now, I would be out of this before this level right there, this blue line, and that level is 116.54 euro to the dollar. Now, what I would also look for at that 116 level is a possible long. Once price turned around, and if price turned around, I might look to enter a long in this area, and then I would be out prior to this 117, 160 level, which is right here, this prior level that we talked about. I would be out. So I'm going to delete this to make this a very clear look on this trade. I might take a trade that looks something like this. Okay, now I'd be real careful with that because there is structure right here. Price is going to have to get past that. And there might not be a lot of meat on the bone for this, but if in fact it's possible, I will take it. And we might end up seeing another 2-to-1 or better. But as price approached this level right here, which is 116.895, I would either have stops to entry. I would maybe even take some profit off and manage my risk at that time. So two separate trades, a short and a long on that. Let's take a look at GBPJPY. Again, this is another JPY pair. I probably won't touch it this week. I have some rules where if I did want to take a trade, I'd have to see the market digest this entire move and start to make sense again. Now, that being the case, there is a key level down here. That's 210,456 yen to the pound. And if price can touch that or come near it and bounce off of that, there might be a nice long, and I would be out of that long by 213.32, this blue line here. And the reason I choose that is because if you look back, it was a key structural level sometime back, and there hasn't been a ton of structure since, with the exception of this level right here, right there. So let me make this arrow a little more usable. That level right there, and this is below that level. That means that this level is not going to get in the way, and I can be conservative and take profit just below that 213.35, 213.36 level. Okay, so I would probably only take that long. I'm not really interested in trading JPY pairs, but if I had to take a trade, it probably would look something like this. Let's take a look at gold. Now, both gold and silver are bearish. It's going down, but sitting right at a local support. So I probably would wait for gold to break below 45.10 before taking the short that you see on the screen, right? This blue line right there, about 45.10, that pivot right here where price kind of came down, bounced up, that's going to create structure where price may want to bounce up again. So I need to see it break below that. It'll come up maybe to grab that structure or near it, and then I look to enter a short, and I take that short all the way down to this prior support down at 43.49, which is all the way back here. Okay, that's why I have that target right there. Okay, let's take a look at silver. Very similar to gold, it's a bit bearish, and it's already broken below some of the support, but I want to see it come down a bit, come back up and grab. This time, the number is going to be 72.93-ish. If it can grab that number, I might consider a short. It's a little dangerous because of that look right here, which is at 72.20. That would be the more conservative place to look for a trade, but I would still consider taking a short if price came up to 72.90. There are a lot of structural reasons for that, and then take a short down, maybe down to 69.53, this blue line down here, the bottom of the green box. I would just be really careful as price approached this pivot point, and that number, just so you have it here, is this blue line associated with that pivot, and that blue line is $70.87. I would either be out of the trade by then, I would be at least stop to entry or take some profit, anything where I could at least take a win out and take off all the risk. Okay, so that is the plan for this week. There's a lot of choppy trading. It's kind of tricky. Now that can change if there's a major breakout, but what we do is we predict here at Algo Factory where price is going to go, when it's going to get there. We use that data to extract money out of the market, and we teach people how to build and automate this procedure. Now, again, if you want a sneak preview, right, to the way that you can extract money from this market, you could just go to the link in the description, click it. It's the heart and soul of the agentic AI trading bot that everybody is very interested in right now. And if you haven't heard of agentic AI trading, you will soon. Agentic AI, everything is coming. Now, AI has been in trading for a very long time. It's been in probably for more than 10 years. So fortunately, trading is still profitable despite the fact that AI is in it. And it might be one of the last things that stays profitable with AI in it, not replacing humans, right? That said, if you want to take part in that game, you're going to have to learn how to build the trading plan. We teach you that at Algo Factory. And if you click on the link in that description, it shows you a video where I build a very basic, simple algorithm so you can see the process. And then once you have that, you also see how I turn it into code. Like I said before, we show you the tools traders use to connect that to their broker so it will trade while they're actually doing something else. They don't have to be sitting at the computer. They could be, like I said, playing golf, spending time with your family, at your kid's soccer game, whatever it might be, is going to trade while you're gone. But you do have to optimize the code for whatever you're trading before you do that. And you probably want to build your own algo as it is. So come to algofactory.tech. Also join us 8:30 a.m. EST, Tuesday through Thursday sharp. We do it live. You can have requests live, or you can simply just put a request in the comments, say, I want to see this, that, or the other. I may not chart it if it's like some kind of dumb meme coin. For the most part, I can fulfill requests. Thanks for watching. Hopefully we see you 8:30 a.m. EST sharp right here on YouTube. Catch you later.